The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. If you want to call in, the number to use is 877-927-6648. 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. You can download the podcast of this show anytime on iTunes. And another way to listen to all TFNN programming is with your smartphone. Just type in tfnn.mobi. You don't need the HTTP. You don't need the www. Just type in tfnn.mobi on your smartphone browser, and you can listen to the stream that way 24/7. If you're listening on your PC, be sure to tune into Channel 1 in Tiger TV so you can see the charts that I'm talking about on the radio program. Coming up at about 25 past the hour, I'm going to have my friend Bob Lang on from explosiveoptions.net. I have Bob on every now and then to get his insight on the market, so he'll be joining us at 25 past the hour. And a reminder that I write the Ultimate Growth Stocks newsletter at TFNN. I launched it in late April. You can get a trial right on the homepage of TFNN.com. You can click on the newsletters tab along the top navigation of the homepage, and then click on investment newsletters. You can find it that way, and I'm also in the carousel there right on the home page. I publish my newsletter every Tuesday, so I sent out my last my latest weekly update earlier today. I send out email, buy, and sell alerts in between, and general market updates when necessary. But I do an extensive weekly update every Tuesday, and then email alerts during the week when warranted. It is a growth stock newsletter. I use a combination of fundamental and technical analysis when evaluating a stock. I often refer to myself as a top-down investor as opposed to bottom-up, meaning that I sort of let price and volume in the major averages sort of dictate my buy and sell decisions. So when I'm seeing signs of accumulation in the market, which unfortunately I haven't been seeing, nor am I seeing it today, I tend to put money to work. I tend to be more aggressive buying stocks. When I start to see distribution, similar to what we saw last week in the market after the Fed policy statement came out, Operation Twist was announced, and we had some pretty significant declines in the market last week, with the transports down about 10%. The Russell 2000 crashed 9%. So distribution in the market that we saw last week caused me to lighten up on some positions in my model portfolio. So I urge you to take a trial to Ultimate Growth Stocks and see how you like it. Turning to the market today, well, we have a lot of green going on, but checking the market right now, see that we are a little bit off highs here. The Dow up 256 points, that's 2.3% to 11,300. The NASDAQ up about 52 points, 2.1% to 2568, and the S&P 500 up about 24.5 points, 2.1% to 1187. Looking at a chart of the S&P 500 here, you can see we're working on 3 straight gains for the S&P 500. The line in the sand right now is its 50-day moving average. It's still below its 50-day line. That's at 1207 thereabouts. And you also have a high right in this area here of 1220, and then resistance at 1230 as well. So those could turn out to be formidable resistance levels for the S&P 500. We'll have to wait and see how that plays out. Taking a look at the NASDAQ, take a look at the composite here. And again, tune into Channel 1 on Tiger TV at TFNN.com, and you can see these charts right along with me on your PC. Here's a look at the NASDAQ composite. Again, up about 2% today, working on 3 straight gains. It's sitting right at its 50-day moving average. It fell below the 50-day line last week. It's trying to rally back above it. Today it's 50-day moving average is at 25.71. NASDAQ is currently at 25.67, so it's still just a little bit below what was once a support level for the tech index. The key resistance level looking at the NASDAQ right now is going to be 26.43. That's the high set right in this area here. So 26.43 is a level that we'll be looking for the NASDAQ to take out. Unfortunately, similar to yesterday, there was not much volume behind the market rally today. At last check, volume was on pace to be close to Monday's level. On Monday, New York Stock Exchange saw a volume of 1.15 billion shares. It's a little bit below average, but we're on pace to hit that level again today, so not much conviction behind the buying. NASDAQ volume yesterday, also below average at 1.96 billion, close to 2 billion shares. We're probably going to come in pretty close to that level today, either a little bit above or a little bit below. So what do we have here? Well, the early gains in the market fueled by hopes that Europe is getting closer to containing its debt crisis. Tomorrow, actually Thursday, is going to be a key day. That's when the German Parliament will vote to expand the European Financial Stability Facility, the EFSF. Currently, it's at 596 billion. Some say that could grow much bigger. Of course, the funds here would be used to recapitalize banks that are in a bit of trouble in Europe and lend to other troubled countries, companies that could be on the brink of defaulting, like Spain and Italy. And of course, Greece is still Greece, working through its problems. But the key date right now will be Thursday. The German Parliament will vote Thursday on whether or not to expand the close to $600 billion European Financial Stability Facility. So if we get some resolution to Europe, that obviously is going to remove a layer of uncertainty in the market, then we can come back to the home front and worry about this U.S. economy that is not in great shape. All right, so taking a look at oil today, oil up a little over 5%, call it 5.3% to 84.45 a barrel. Taking a look at a popular ETF that tracks the price of oil, the ProShares Ultra Oil and Gas. You can see this ETF is up 5% today to 36.87. Still quite a bit of technical damage done to oil in recent weeks. The dig is currently below its 50-day moving average, below its 200-day moving average. I suspect if it does continue to rally, I mean, it's still far below its 50-day line at 44.77. But you can see the dig hit an intraday high of 37.87, but it's pretty much at its session low after gapping up sharply. It again trading at 36.87, right at its intraday low today, so well off its session high. Taking a look at gold, December gold added $57.70, or 3.6%, to settle at $1652.50 an ounce. Let's take a look at the Spider Gold Trust, the most liquid gold ETF out there, the GLD. It got really smacked hard last week and fell below its 50-day moving average. The GLD is currently up 1.7% to 160.30, below its 50-day moving average at around 170. So there's definitely been some technical damage done to the GLD, some pretty significant institutional selling last week, and we'll see what happens with gold going forward. Taking a look at the dollar, at last check, the dollar was under a little bit of pressure, and this is the UUP, the Power Shares U.S. Dollar Index Bullish Fund. Dollar's down. UUP is down 0.7% to 22.02. It did fill its gap up from last week, and it is close to its session high, even though it is trading lower by 0.7%. It is trading up near its intraday high of 22. Shares of UUP at 22.02. And its intraday high was 22.05. All right, I also wanted to take a look at the TLT. This is a bond fund, the iShares Barclays 20-plus year Treasury bond fund. This is interesting because if money continues to come out of bonds, this could be good news for stocks. So even though we haven't seen a lot of volume in the market yet and still waiting for some bona fide follow-through for the major averages, if bonds remain under pressure, this could continue to funnel money into the stock market. Again, it would be good to see money coming in from the sidelines, institutional buying in the stock market, but the TLT has been under pressure now for 3 straight days. Haven't seen overwhelming volume to the downside, but TLT is currently down about 1.7% today to 116.93. So money continues to flow out of bonds. That could be good news for the stock market. And let's go ahead and just take a look at bond yields here. The TYX, which is the 30-year yield. See, bond yields have just been obliterated recently, but have been in rally mode over the past 3 sessions. The yield on the 30-year right now, call it 3.11, maybe 3.12%, and also take a look at the 10-year here, which is TNX in my charting service. Yield on the 10-year note right now about, looks like it's over 2% now, call it 2.01. 2.02. So bond yields have been in rally mode over the past 3 days, and that has certainly given the stock market a lift. In economic news, let's quickly take a look at the Case-Shiller, the S&P Case-Shiller 20-City Composite Index. U.S. home prices rose for the 4th month in a row in July. Prices rose 0.9% compared to June. Compared to June 2010, prices are down 4.1%, and they're down 31% from their peak of 5 years ago. So good news that home prices are slowly but surely starting to rise, but they still have a long way to go to come back. Meanwhile, the Conference Board Consumer Confidence Index came in at 45.4 earlier today, up slightly from 45.2 in August. Economists expected a slightly bigger jump to 46.6. Tomorrow we've got durable orders, Thursday weekly jobless claims, the final revision to second quarter gross domestic product, which is going to be closely watched. The second estimate showed growth of 1%. This time it's expected to edge higher to 1.2%. I don't know. I wouldn't be surprised to see a disappointing number here, but we'll see what the final revision to second quarter gross domestic product looks like. And finally on Friday, personal income and spending, the Chicago Purchasing Managers Index, and the final revision to the University of Michigan Consumer Confidence Index. In earnings news, quickly, let's take a look at Walgreen before we head into the break here. Shares of Walgreen under quite a bit of pressure today, down 6% to 33.81. A lot of technical damage done to Walgreen. Earnings were better than expected, but the company's deal with pharmacy benefits manager Express Scripts officially ended. No progress has been made in contract renewal negotiations. Coming up next, Bob Lang, folks. We'll be right back.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. I'm pleased to be joined right now by a good friend of mine, Bob Lang from ExplosiveOptions.net. I talked to Bob a lot about the market, and he has a great website over at ExplosiveOptions.net. Very savvy options player. He's also a contributor at realmoney.com and realmoney.pro. Or Real Money Pro, I should say. Bob Lang, welcome back to the show. How are you today?
Great, and great to be with you this afternoon. It's been quite a wild ride here last couple of days. The market really rocketing up after last week's struggles midweek.
Yeah, and actually I'm looking at the markets here, and I don't see any news, but we seem to be hitting some selling pressure here to go with about 35 minutes left to go in the session. NASDAQ only up about 1.5%. I talked earlier about the fact that there was never much volume behind the rally. So is any news that you can see, or are we just kind of coming off the highs due to lack of volume?
Not much news coming out, Ken, but really, look, this market is moving, at hyper speeds right now, and yesterday we ran up pretty significantly in a very, very short period of time, and then today we gapped higher and didn't really fill the gap, and we moved up to up 30 handles. And if you add those 2 days together, up 65 plus handles from low to high in about a day and a half, 2 days. We move from these overbought to oversold conditions literally in a couple of days. So I suspect that we just got a little overdone on the buy side here, and certainly we see some selling. But what, I'll tell you what, not too long ago, we had some news out from Meredith Whitney, who is cutting numbers on Goldman Sachs and also Morgan Stanley, which has forced the financials to give up some of their gains of the last day and a half. So.
Gotcha. Last time I had you on, it was ahead of the Fed meeting. The Fed meeting came and went. Policy statement, came out. Ben Bernanke said that significant downside risks are there in terms of the economic outlook. I don't know if you heard Dallas Fed President Richard Fisher earlier today. He said that this was pretty funny. He called Operation Twist, quote, jiu-jitsu on the yield curve, and that it is likely to prove ineffective and could actually work against job creation. What do you think about Operation Twist? Obviously, the markets were down big last week. Is this going to help anything, Bob, or what's your take on that?
All these quantitative easing policies are supposed to generate a little positive sentiment to the markets, and that's really what it is. A colleague of mine over at Mr. Top Step, who's George Cavaligos, keyed me in and sent me a chart, which was really telling last week. Right after the Fed's decision meeting last week, right after the policy statement was released, the yield curve absolutely just flattened like a pancake. On the long end of the curve, you saw rate yields coming down quite significantly. On the short end of the belly of the curve, actually, you saw rates starting to rise. So it was quite the historic event. We haven't seen anything quite like that. At least I've never seen anything like that in my years of watching markets here. So, no, it was a very historic thing. And in my estimation, I think the Fed did the wrong thing. They didn't need to do anything like that. They're not going to do anything to increase economic stability here or help growth from an economic standpoint here. They're not going to help jobs. It's all done based on sentiment, Ken. And if the market's not buying into it, we're not going to see any reaction at all to it.
Gotcha. So, Bob, back to the stock market. Earlier today, when the major averages were up 2.3, 2.4, 2.5%, I was looking through a lot of growth stock screens that I use, and I have to say it was a very, very strange market. I mean, you see these big percentage gains in the indices, and I really wasn't sure what was leading the market, because I saw probably a bigger supply of stocks that were lagging the market or even trading lower. And I mean, are we in a healthy market here? I mean, can these gains be trusted? I said we're coming in off of the highs right now. I mean, what's your take on underlying market health? I mean, is this a healthy market, or is it still a market, in your opinion, that's on the ropes?
Well, I think the latter, Ken, not the former, because if we look at the calendar here, we realize something that we're heading into the month-end, quarter-end period here, and we do see tend to see a lot of window dressing going on. In this environment, but look what happened yesterday. I mean, there was some perceived bad news with Apple. Apple was down $11-12 at one point. It closed only down $1.
Bob, appreciate the input. I'm going to have to interrupt you there. Bob Lang, explosiveoptions.net. Thanks so much for coming on the show. Always appreciate it.
Thanks, Ken. Have a great day.
All right, take care, folks. We'll be right back.
If you're in the market for a jumbo loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you. Thanks for tuning in, and thanks again to Bob Lang for coming on the program in the last segment. Yeah, I mentioned to Bob that even when we were up 2.3, 2.5% earlier today, and there was a lot of green everywhere. My growth screens never had a good feel to them. I saw a lot of stocks, a lot of high-quality names, market leaders that were lagging the market. Some stocks were actually trading lower, and there are some stocks that are working here. Some breakouts that are working and extending gains, but those are really the exception, not the rule. I'm seeing a bigger crop of names that I consider high quality having a hard time keeping up here. And the bottom line is the volume. I know you can talk about lack of volume in this market till we're blue in the face, but volume still matters. And the bottom line is that the trend that we've seen is heavy volume on the downside and light volume on the upside, and that is problematic more often than not. So it doesn't mean that I got to put in the disclaimer. It doesn't mean that we can't move higher from here, and we could wedge higher in light volume for a period of time. But I normally, if we're in a healthy market, and you do see good follow-through and good volume, you want to see an adequate crop of strong performing stocks around that are capable of leading the rally higher. A lot of the strength today, I know, has been in a lot of names that have been beaten down incessantly in recent weeks, and they're not necessarily coming from some of the strong price performers with the healthiest chart. So we'll see how things play out in coming days. But remember, last week in the market, we did the only major averages to undercut their August 9th lows were the Dow, the NYSE Composite, and the small cap indices did it as well. The Russell 2000 and the S&P small cap 600. The S&P 500 and the NASDAQ were able to hold above the August 9th lows. So in terms of follow-through, you want to be watching the Dow, the NYSE Composite, and either of the small cap indices. Starting tomorrow or later in the week or beyond, if you see percentage gains similar to today, preferably in that 2.5–3% area on a big surge in trading volume, that's your follow through where at least you can feel comfortable that this rally could have legs. But we're not there yet. We're still in an unconfirmed rally, and frankly, looking at the market's performance today, where we have fallen off our highs, there's just without volume, it's going to be tough. All right, taking a look at some other headlines today. We talked about the decent earnings from Walgreens, but the stock was trading lower. Let's take a look at shares of Research in Motion, another stock that has been hammered pretty good in recent months. But interesting news today from Carl Icahn. Let's pull up a chart of RIM here. See, the stock is outperforming today, up 4.3% to 22.62. It's working on 3 straight price gains. News here, speculation that activist investor Carl Icahn possibly has taken a stake in the struggling technology company. So shares of Research in Motion benefiting on a rumor that Carl Icahn may have taken a stake in the company. Also today, Morgan Stanley came out with their 25 favorite secular growth stocks. New on the list, LinkedIn, LNKD, Dollar Tree, and Potash. Cree, Dollar General, and Netflix are out. Names like Apple, Amazon, CMG, VMware maintain their spot on the list. But anyway, we'll touch on that list when we come back. Stick with us, folks. Breakout Investing. We'll be right back.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Before we went to break, I was talking about Morgan Stanley's 25 favorite secular growth stocks. The list came recently, just came out, and mentioned some stocks that had kept their place on the list. Apple is one, but let's take a look at Apple because its price performance today is interesting. The market is up nicely. Apple is lagging, showing very poor price action, down 0.7% to $400.44. Now, if this market were really healthy, I would expect Apple to be the type of stock that would not be trading lower. You can see two recent heavy volume declines in the stock. It is still holding above its 50-day moving average at 385, but this is a stock that is trading, frankly, a bit strange during an up tape. Apple announced a press briefing scheduled for October 4th. That is when the highly anticipated iPhone 5 is expected to be unveiled. So that is interesting news from Apple. The iPhone 5 will soon be out, but stock trading very strangely today. Let's also take a look at Amazon, another stock that had really solid technicals and was showing excellent price strength in the market. Amazon is also on this Morgan Stanley's 25 favorite secular growth stocks, but just terrible price action today. Stock is down 2.5%, $5.76 to $224.09. This is not the type of action, either whether it be Apple or Amazon, that you would expect to see when the Nasdaq is up. I mentioned it is off its highs, but the Nasdaq, it's really kind of coming well off its highs here, now down or up, I should say, 1.3%. That's a full percentage point down from where it was. So Amazon also trading poorly. It's scheduled to show off its new tablet computer tomorrow. The blog TechCrunch reported that Amazon's tablet will be called the Kindle Fire and should be ready to ship in mid-November. So I'm not sure what to attribute the recent selling in Amazon to, but the stock is not acting right in this tape. Now, a couple of analysts, I remember it was Wedbush last week, Bank of America earlier this week, said the company may be interested in acquiring all of Netflix, and that is just a rumor at this point, and perhaps there's some investor anxiety about this transaction taking place. So it remains to be seen if that's going to happen, but if you're wondering, looking for reasons why Amazon could be trading weekly in a decent tape, that could be part of it. So Apple and Amazon. A couple, going back to this Morgan Stanley list of 25 growth stocks. Last time they came out with the list in September 2010, a year later, the list was up 26.6% compared to a 5.4% rise for the S&P 500. So good lesson on why it's generally a good idea to focus on growth stocks. It has some interesting new additions to the list. Interesting name here, American Tower. They basically operate cellular towers for wireless service providers. Interesting chart here, potential breakout taking shape. The stock is up 2.1% today to 54.65. So American Tower has a pretty decent technical picture. Main issue I have with this stock and just about every other stock in the market is just there hasn't been enough volume behind up days to make me think that a breakout is going to work here. But American Tower not far from its high at all, still showing technical strength. And another name here, the Fresh Market. This is a new addition to Morgan Stanley's 25 favorite secular growth stocks. Fresh Market is TFM on the NASDAQ, actually. Another stock that is hanging in there, mostly unchanged today, down 8 cents to 39.32, not far from a breakout over $40 a share. So that's the Fresh Market. All right, taking a look at some other movers today. I've mentioned, speaking of the iPhone 5, which is going to be released on August 4th, Avago Technologies has got its chip technology in the Apple iPhone. This is a stock that I'm waiting for a possible breakout, but I'm just not sure it's going to happen. This is another name that is trading near a session low. It hit an intraday high of 35.15. Shares are still up 1% to 34.48, but it's trading all the way down near its session low. So I'm watching Avago for a potential move over 37.99. That would be the swing point right up in this area here, but remains to be seen whether or not it's going to hit that swing point. And it also remains to be seen if enough accumulation is going to happen in this stock to fuel a viable breakout. Did see pretty good volume today in Peet's Coffee and Tea, PEET. On the NASDAQ, let's take a look at Peet's. Now, this is an example of a stock that is actually showing pretty good signs of accumulation over the past 4 trading sessions. Volume has been heavy for 4 straight days. Stock is just climbed above its 50-day moving average today. It's forming a base. There's some pretty good resistance in its chart right around the $59 price level. Stock is up 3.5% today to 57.19, but seeing good signs of accumulation in Peet's Coffee and Tea. So this is definitely a stock worth watching. The fertilizer stocks have bounced back. Remember, the fertilizers got hit really, really hard last week, and here is Terra Nitrogen. It's thinly traded. It doesn't have a big average daily volume, but you see the stock recently came down to its 200-day moving average. Stock is outperforming nicely today, up 6.5% to $150.50 a share. This is simply a base building stock. It's not a stock that I would buy down here. Some traders would, but I suspect that its 50-day moving average at 166 could turn out to be a potential resistance level. But volume at one point today was pretty heavy in Terra Nitrogen. Another leader in the group is CF Industries, a stock that we've talked about in the past. It got hit hard as well after hitting an intraday high today of 159.60. The stock was recently trading around 154.52, down in the bottom half of its trading range, so buying demand drying up here as well. Stock is still up 1.6% to 154.52. And finally, let's take a quick look at Decker's Outdoor. Last I checked, the stock was trying to break out over 103.52, but look at this, a failed breakout. Stock is now down up 0.4% to $100.41. Still a very, very difficult environment for technical breakouts. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to tfnn.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks, to Breakout Investing on TFNN. You know, this market rally, as it was taking shape for most of the day, it never felt right. It never felt right. I talked about it earlier in the show, where I was looking at my screens and seeing stocks that were down, that it just seemed like they should have been up in such a strong tape. And I saw, you know, several other high-quality names that were lagging the market, up maybe 0.5%, up maybe, 1%, when the NASDAQ was up 2.5%. There just didn't seem to be enough leadership around, enough leadership from high quality names leading the market. So where are we at now? Well, the selling is continuing into the close here. The Dow is now up 118 points, call it 1.1% to 11,161. NASDAQ well off its highs, up 17 points now, 0.7% to 2533, and the S&P 500 up about 6.5 points, 0.6% to 1169. So volume at last check was tracking pretty close to Monday's levels, which were below average. There wasn't much conviction behind the buying yesterday. There was never much conviction behind the buying yesterday either. Volume right now looks like it's tracking now a little bit higher than Monday, but not by much, maybe about 2%, 5%, something like that. So we'll probably end up being average on the NASDAQ and New York Stock Exchange today, or maybe just slightly above average. But either way, not shaping up to be a strong close for the market today. Take a look at Chipotle Mexican Grill. This was one name that really was trading strangely today, a stock that, even though it is in a late stage base, it just seems like buying demand is starting to dry up in this name. It is a Wall Street darling, a great track record of execution, well-run company. They recently opened their first Asia casual restaurant in Washington, D.C. They're going to test run that, see how it goes, but I have no doubt you can get some pretty great food there as well. But Chipotle down 2.8% today to $320.15. Take a look at Lululemon. Again, some of these aggressive growth names, it concerns me that they are under pressure here. Lululemon now off its high near its session low. Stock is now down 7 cents to 55.61 after hitting an intraday high of 57.99. Taking a look at Priceline, another stock that arguably is a late stage base. Shares of Priceline down 0.8% to 509.57. So there's just a lot of growth names out there that look very tired to me. That's the bottom line, and it's making my growth screens, they're not really ripe with buy candidates right now, which is a bit frustrating because the market does feel like it wants to go higher. But after a day like today, where you're getting looks like a finish near the lows, and growth screen's not really yielding much, it's a big reason why my model portfolio is still favoring a very heavy cash position. I think I only have 4 or 5 stocks in there right now, so still favoring a lot of cash, waiting for the market to prove itself, waiting for my growth screens to start to populate with better buying opportunities. I'm just not seeing them right now. Coming up after the close, we have earnings from Accenture and J-Bill Circuit, ticker ACN for Accenture. Excellent fundamentals here. Another strong quarter is expected. Technically, the stock does not look that healthy, but Accenture consulting firm is expected to report profit of 89 cents a share, up 35% from a year ago, with sales up 20% to $6.5 billion. Also, we have J-Bill Circuit. J-Bill Circuit is ticker JBL. It's a contract manufacturer of electronics for the aerospace, automotive, computing. Let's pull up J-Bill real quick and take a look. This is after early strength. J-Bill is also near its session low. Outperforming today, up close to 4% to 1736. J-Bill is expected to report profit of 56 cents a share, up 8% from a year ago. Thanks very much for listening, folks. Talk to you Thursday.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa, with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010, with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.